All right, we're live. How's it going, Don?
Oh, it's going fantastic. Thanks, Nathan.
Good to have you this morning. We just caught you from, what did you say? You were at another event.
Yeah, I was doing a webinar, right? Exactly. Just teaching real estate investors how they can legally reduce their taxes almost to zero and get 100% asset protection as a bonus.
Well, let's look. I'd love, that's why I have you on here. I think you could be a valuable asset. So, Investors Thrive Nation, if you're tuning just in, we have Don Thornton, a exit strategy tax expert. He's going to explain how you can protect your assets that you have and how to pay less money in taxes. And honestly, that's what we all want, right? I mean, I'm sure the demand is high.
Oh, absolutely.
Yeah. Everybody's got to pay taxes. I mean, you can't get away from it, right?
You almost can. With this
Well,
strategy, almost.
well, there you go. I guess if you can, you're the guy that knows how, right?
Right, exactly.
Go to investorthrive.com right now to check out some of our free training on how you can make money as a real estate investor, or schedule a time with me so we can chat about our mastermind mentorship and how we can help you learn how to wholesale nationwide and grow your business. Tell us kind of like a little short intro of who you are, so people that are tuning in can kind of get to know you a little bit better.
Sure. Like I said, my name's Don Thornton. I have a 20-year real estate investor veteran. My, I guess my niche, if you want to call it that, has been short sales. I lost track of how many short sales I flipped in 20 years. I think it was at least north of 3,000.
My God,
And
a
it
lot.
was a great business. And then there's this thing called COVID. I don't know if you heard about that or not, but
Yeah, we all have,
no,
yeah.
when COVID hit, it shut down the foreclosure proceedings for 18 months here in Florida, where I'm based.
Mm-hmm.
And it was like, wow, that's crazy. And then, luckily, I mean, I've this is not the first time I've ever been through a situation where you had a challenge where you had to find creative solutions and so forth. And so, we've done really well having to do things a little bit differently, not just relying on the foreclosures being filed in the courts every month.
Right.
And it really really brought to the forefront how important it was to make sure that my profit bucket wasn't leaking out, right? Because when times are tough, that's when you really start to notice how much you're actually paying out to Uncle Sam. And before, I mean, I'll be honest with you, it was a little bit of arrogance on my part. I'm going to have another deal coming in. I got 2 or 3 deals. I'll cover the tax stuff in 2 or 3 deals, and everything else is mine. And I
Mhm.
didn't care that I was spending, $30,000, $40,000 a year sometimes or more on my taxes, because it was like, well, it's 4 deals. And but of course, when you realize that your income is now going down, you start to think to yourself, well, I don't want to give away 2 or 3 or 4 or 5 deals a year to pay Uncle Sam. What's he doing for me?
Yeah.
Really?
For sure.
No.
Yep. No, I agree. I mean, you definitely don't want to work 3 or 4 houses just to give it away.
Exactly,
It's
exactly.
crazy.
It's like having this partner that doesn't provide any value to me, and
Mhm.
I'm having to just shell out the cash every month. So it was kind of one of these things where, in 20 years, what has been so amazing to me in real estate, if you accept the fact that the creative solutions are not the exception or the norm, and you always have to be open to what the universe gives you, if you want to call it that. And I met someone that told me about this. I had known him previously in
Mhm.
different ventures. He's also a real estate investor. And he said, Don, you got to look at this. And I wasn't gonna, whatever, I don't want to do it.
Yeah,
And
it's
he,
just something else to you at that.
yeah, someone else is gonna pitch me something. And what for me, prime rib changed my life.
Prime rib?
Prime rib, because he said, come over for Thanksgiving. I said, and he goes, I'm making prime rib. And I said, really?
That
Okay, I'll
changes
go.
that changes a lot of people's lives, you know? That'll get them over there.
I went over there 8 hours later. I was like, yeah, this is amazing. This is amazing. I'm going to do this. And so I'm very proud to announce that the very first year anniversary, I
Mm.
got, I go to the accountant, and the accountant says, well, no taxes this year. Just pay my
Wow.
fee, and that's it. I was like, yes.
And
It
that's
was
the first
great.
time, would you say, like, well, not the first time, but you've been investing for a while, like, you've been paying taxes pretty much probably the whole
Yeah,
time.
paying too much taxes. Yes,
Wow.
absolutely. Yeah. I mean, my the first year I broke through in 2004, I went from barely making it, living, supplementing my diet on 7-Eleven Big Bite hot dogs and Slurpees on my gas card
Yeah.
to making almost $1 million in 2004. And so from then on, it was just like, like I said, I was putting that money out. So it was the first year where I was able to, legally not have to pay the taxes. I converted all that ordinary income that I was paying 32% on
Hmm.
to permanently tax deferred passive income. And so I was able to bring my pre-tax net income down so low that there were no taxes to be owed.
That's amazing. And if you don't mind, I think people that are watching, we'd like to kind of see your journey because 20 years is a long time. Like, have you
Right.
been just a fix and flipper, or like what kind of real estate investing have you been in that time period?
Short sales.
All
That's it.
short sales. Okay, all short sales. Even throughout like last five.
No, I mean, no, let's put it this way. Okay. I've done my share of subject twos, right? I've
Mhm,
done my share of fix and flips because not all foreclosures are upside down.
mhm,
So when I got those kind of deals, I would do what you normally do: take a subject to, do a quickly rehab on it. I call it putting lipstick on a pig and
mhm.
get it out there, and just flip, 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 right? So yeah, so that's what I did, a lot of those. And so but I mean, the focus was on the short sales. That stuff was secondary.
Mhm. Gotcha.
Right.
Yeah,
Mhm.
like the other options, you mean, like, is
Yeah.
that what you mean, like subject twos and
Yeah,
flip?
I never did lease options. I mean, pretty much it was just lease. I mean, the only thing that I did to supplement my income when the foreclosure moratorium was announced was that I reactivated my real estate agent license, and I would list some of those through my
Yep.
company, and I would just, if they, because I'll be honest with you, I probably overlooked a lot of opportunities in this red hot market
Mhm.
just because I don't trust the crash. And is it going to crash? I don't know. A market correction's coming, and I'm just very, very. I know too many people in 2008 that lost their shirts
Mhm.
because they weren't being cautious.
Yes.
And you have to. I decided I want to be cautious, and so
Mhm.
I said, you know what? I'm going to take a hit on my income, and I'm going to protect everything that I have, and I'm not going to risk that. And so I can supplement the investing side with commissions for people who don't want a cash offer. Like, okay, I'll list it for you. Give you a reduction on your commissions or whatever, and that's been a winning strategy. But yeah, so I mean, from real estate side, that's what I was doing. But I was always interested in short sales just because the idea that I can create equity and profit just from negotiating, risking no money, was for me like this is the most brilliant investing strategy I ever heard of.
Do you,
So
I know no one can foretell what's gonna happen in the market. There's a bunch of different, perspectives, but what do you feel like short sales are coming back or?
I do, yes. We're already. It depends on the market where you're at. I know here in Florida, we're already starting to see, declines in the values. Now, the
Mhm.
the the challenge that I have as a short sales specialist is that I can see what's happening now with the market. The banks are not going to start seeing it until 8 months after it starts to happen.
Because that's when
So
they get the properties, right?
that's when I start seeing, okay, yeah, they're always about 6 to 8 months behind.
Okay.
Well, that's what happened in 2006 to me when I didn't close a single deal in 2006,
Mhm.
and that was really the biggest danger point I had in my career. Was they just I was once the market started to go down, it went down so fast that by the time I negotiated a killer discount, by that time it wasn't a killer discount anymore.
Frustrating.
So I had to wait it out till it bottomed out. Now, do I think it's going to be that way this time? No.
Mhm.
There's no toxic mortgages out there,
Yeah.
and we've recovered since COVID. Most of our employment is recovered, so you don't have the massive unemployment that we had, in after COVID hit really bad.
Right.
So economically speaking, I don't see a reason why that we should crash.
Mhm.
But there was a lot of properties that were bought way too high, and that correction is going to happen. And
Yes.
the people that finance them with 100% financing or FHA or whatever, they're the ones that are going to get hit, and they're
Yeah.
already going to get hit.
Because they didn't put any money down and don't have
Right.
any equity?
Yes,
Okay.
they're always the ones that get hit first.
Yeah, and I'm sure there's quite a few that's happened over the last 2 years or
Mhm.
so. So, let's kinda get into, so you you met with this guy for prime rib. Was this
Yes,
how long ago was this?
Oh, a year and a half, I guess, something like that.
And this is when the light shined on you and you just saw the light. Is that right?
Yes.
Okay, so after, he showed you this and you're all in, what was what else happened? What was like the next step after
Well,
that?
I invested in it. I mean, the whole thing is how is the tax reduction is done by buying a beneficial trust. We call it. The actual name of the trust is, and it's a mouthful. It is a non-grantor, irrevocable, complex, discretionary spendthrift trust. And
Wow.
the reason why you say it that way is because each component of that name has a different advantage that you get from other trusts. I mean, there's trusts out that are out there that are revocable. There are some that are irrevocable, but they're not spendthrift. The way these things work together makes it a unique trust that gives you, first of all, 100% asset protection. The trust cannot be penetrated uh, except if they can prove that you were doing fraudulent activity. Other than that, they can't get it. I mean, it's protection enough to where if you do get sued by somebody, as soon as that gets in front of the judge and your attorney or you yourself tell the judge that this is a spendthrift trust, is going to say, well, you can't sue it. That's literally
Mm.
how deep in the vault you have your assets. But the most exciting thing for me was because I don't really hold properties. I don't have a big rental portfolio. I've been basically a short sale negotiator, not negotiator, investor and flipper all these years. I just flip. So for me, it was not the asset protection was less important to me than the tax advantages. But this trust has unique tax advantages that come into play when it works in concert with another entity. Okay.
Mm, okay.
So, but you have to have this beneficial trust. I'll say that for the sake of oatmeal in my mouth with that name of that trust.
Yeah,
We're going to
yeah.
talk about beneficial trust. So when I have that trust, I'm going, you as a client, you're going to sell all of your assets, personal and business, into the trust, and the trust is going to give you a demand note for the value of those assets. Okay. And
Wow.
this is done because you don't want to create a taxable event on the sale and get caught with capital gains. Okay.
Oh, wow. Okay, so this helps with capital gains as well?
Even at the beginning, yes, even more so once we get into it. So once the trust is created and you're named the trustee of the trust, and all the assets that you own, used to own, are now in the trust, you have total control of those. That's what the word discretionary means. The
Mhm.
trustee has 100% discretionary power over what the trust does with those assets, and make all the decisions. So now I control my assets, but I no longer own them, which
Mhm.
means they can't come after me for anything. And I can't come after me as a trustee. They can't come after my assets because they now are owned by this trust that has 100% vault that they can't penetrate. Okay.
It's a good idea.
So now uh, I need another entity to be able to create the tax reduction on a massive scale. Now you can do that with a LLC, or you can do it with a business trust that we also sell. The business trust is better because everything is in that vault of asset protection. If you do it through an LLC, you get the tax advantages, but anything having to do with that LLC does not have any asset protection. That's the trade-off. So, having two trusts is a little bit more expensive, but I tell people if you can only afford the one, get the one, and then when you start when you start saving that money on a grand scale, then you'll have the money to be able to buy that additional trust and maybe lock it all down with the asset protection.
Wow.
Okay.
Yeah.
So what I'm going to do is the beneficial trust with me as a trustee, we're going to get a 90% uh, limited partnership in that LLC. I'm going to talk about the LLC for right now. Okay.
Mhm, mhm.
So so then I personally have 10% of that LLC. The beneficial trust has 90% of the stock, or what you're going to call it, in that LLC. Right. That's really important. I'll explain that in a second. So now that I got the LLC over here, it doesn't have any assets from which to generate revenue because my assets are in the beneficial trust. So, as trustee of the beneficial trust, I am going to lease those assets over to the LLC, which will allow my LLC to operate my business as normal. Find people in foreclosure, negotiate short sales, flip them, generate revenue like I would normally. Okay.
Right.
Well, at the end of the year, just like normal, we're gonna deduct all the expenses that we can, 100%. So let's say, for example, that if I have $1 million, $1.5 million of gross revenue,
Mhm.
I deduct everything, and that brings my pre-tax net income down to $1 million. Okay, so now before IRS is gonna charge me ordinary income is of 32%, which is a huge chunk of my income. I worked hard to make this money. I don't want to give it 32% to the IRS.
Of
Now
course.
let's say, for example, that if I bought if I'm going to sell property that's going to create a capital gains event, a taxable event for me, then what happens is that um, normally I would do a 1031 exchange or do something like that to try to mitigate those or defer those taxes.
Right.
Well, I don't have to worry about those anymore because with this strategy, there are no more capital gains. They are deferred in perpetuity. I never ever have to do a 1031 exchange again. They are like the dodo bird; they are extinct. And when this strategy gets around to more and more investors, it's going to go.
What do you
People
mean? What do you mean by that? Go like they'll change the amount of
not
people.
needed. Why would you want to jump through all those hoops and pay people, tax specialist, and have your qualified person that the money's going to go through on the buy and sell side of it? You don't need it. You just buy and sell as normal, and because the tax advantages with this trust, you don't pay them. They're deferred in perpetuity. You never pay capital gains taxes again, ever.
Wow.
Yeah,
So I mean, honestly, this sounds. I'm not gonna lie. This a lot,
too good to
right?
be true. Too good to be true, right? But
But
that's not it, Nathan. Let me finish. Let
oh,
me finish, okay?
all right.
So that's just the capital gain side. All
Mhm.
right. So now remember, we've got $1 million of pre-tax income. So we leased the assets from the beneficial trust over to our LLC, right? Well, the IRS will allow up to 70% of the pre-tax net income to be used as a lease payment for those assets, right? So we've got $1 million in pre-tax net income. 700,000 of that is going to go over to the beneficial trust,
Yes.
which is going to lower our pre-tax net income down to 300,000.
Wow.
Okay.
Now you're cooking. Now you're cooking.
Okay. We're going to cook some more here. All right. So now remember how I told you that when we set this up, that the beneficial interest is a 90% limited partnership in the LLC?
Mhm.
Well, they need to get paid for their equity position, right? So 90% of that remaining 300,000 is going to go over as a K1 distribution for their equity stake. So now $270,000 of that of the $300,000 pre-tax net income is going over the K1 distribution. Now our poor little LLC only has $30,000 pre-tax net income for you to calculate how much you owe on your taxes. Now, Nathan, let me ask you this: do you think that you're going to pay more or less taxes from 30,000 as from a million?
That's a
Yeah.
guarantee. You're gonna pay less for
Yeah.
sure.
Meanwhile, we have converted $970,000 of your pre-tax net income into permanently deferred passive income. You'll never pay taxes on that. So you've taken this active ordinary income that would be taxable normally, and we've moved almost all of it over to the trust, which can defer in perpetuity any passive income that comes into its bank account.
So
And I
when you
told
say perpetuity, what do you mean? I'm sorry.
forever, forever.
Okay.
As
So
long as that trust exists, those taxes will never be paid.
wow. I mean, that just sounds too good to be true. To be honest,
Uh,
forever.
there's a guy named Grant Cardone. He's kind of an up and comer in the real estate investing business. He uses this strategy.
I've heard of them.
Yeah, he uses it.
Um. So how many trusts would you need to get? Would you just need one, or how many trusts would you need to get
Well,
to really
it
protect
depends
yourself?
on it depends on what you want. Okay, like I said, I call the beneficial interest. Excuse me, the beneficial trust with the LLC. I call that as the halfway pregnant strategy. Okay,
Mhm.
anything that's in the beneficial trust is 100% protected, right?
Okay.
But your LLC's not. So it can be targeted, it can be sued. There can be seizure orders on future income. All that is vulnerable on an asset protection side. To do it the best way is to, instead of doing a LLC, you would use a business trust, and then it's all locked. The same dance between the two companies, that's still there. It's just the business trust gives you 100% asset protection as well, so it's all locked down. It just honestly depends on what you want to do and
It
what
sounds like
your investment.
yeah, so it sounds like if you want to do it right, you need to get the first trust. What did you call the first one? The
Beneficial trust.
beneficial trust, and you need to get a business trust. That's not, is that
Yes.
right? You need so
But
you need two.
for a lot of investors who are, maybe they're not just starting out, but they're doing okay, but they're not, for them, because it's $15,000 for a beneficial trust. That's a one-time investment. Uh, if you want both, it's 35.
Mhm.
So for a lot of people, that extra 20 is a little bit of a stretch. So
Right.
what I advise people is, look, you know what? Do what you can do. At least the very minimum, get the beneficial trust. At least your personal assets are protected, your business assets are protected, and you're vulnerable on the LLC side. But once you start making those tax savings that we just talked about, then you'll be able to buy a business trust. But if you have the funds, get both.
Yeah, so
I'll
you're basically waiting a year maybe to see
Yeah,
those savings to afford the
yeah,
other one. So
right.
the $15,000, is that for including your guys' fee to set it up, or is that just what it costs?
That's what it costs. You also get an entire year of unlimited consultation with our company, as well as the CPA firm that we use, that helps our clients. And
Mhm.
so they'll help you set it up, make sure that you do the assets correctly, and they'll also train your tax person to be able to do what you're doing now with the trust. Make sure it's all done correctly. That's included in the price the
Yeah,
first year.
you wanna make sure that, whoever you use doesn't blow it up, right?
Right,
Yeah,
exactly.
in the
Because
future.
you see, the thing is that if you've seen the illustration, the whole thing is designed to never create a taxable event.
Mhm.
And that's why, in with the special status the trust has, and it's codified especially for IRS code 643. You can look that up if you want. These
Mhm.
types of trust. Uh, you know, they there have been over 10,000, at least 10,000 tax returns that have been done on this trust and this strategy. Not one time has it ever been audited. Not one time.
They don't wanna mess around with that trust.
Even when people have messed around and not done it correctly, the
Mhm.
IRS has come at them to get the money that was a taxable event, but they've never once said this trust is bogus, because it's in their code 643.
Is there a possibility that like you get everything set up in your beneficial trust and your business trust, and then 5 years down the road they're like, this is too good, guys, we're gonna change it? Is that possible?
No, these trusts have been around for hundreds of years. In fact, they have their origins in Henry VIII's time, back in jolly old England,
Oh wow.
and they were taken to the colonies, and then of course they stayed with us. And the very first Supreme Court ruling about this was done in 1810, believe it or not.
So
And
they're
there
pretty
have been
solid.
there have been a number of court cases, decisions, and so forth that have stated that because of the special nature of this trust, that it's been here for since the dawn of our country. It's not going away. And you got to remember too, how many rich people are using this? You think they're gonna, they think they're gonna just, they listen. Congress, people in Congress, they all have this. That's one of the ways they can get around financial or campaign issues and so forth, because they have total anonymity. The money can come in, and they have plausible deniability. They don't. I know what you're talking about. I'm a trustee.
So, is there a certain amount of income that someone should be making before where it becomes beneficial at this? Because I'm sure if you don't make enough, it probably cancels out or doesn't make sense. Is there a certain amount of
Yeah.
income?
I mean, honestly, it depends on what your priority is. If you want the asset protection, then
Hmm.
the investment's worth it. From a tax perspective, if you're paying 10, 15, I would say that's the minimum that you'd want to be paying for it to make sense. But it's up to you. I mean, it makes a but I mean, I have business owners that are coming to me. I had two yesterday. One was a construction company. One was a pressure washing company, and one made was 400 was he had like $40,000 tax bill off of like 400,000 net income.
That would
You
make me
know, it's just
so mad.
crazy. Yeah,
That's ridiculous.
yeah. So I mean, I would say in general 10 to 15, maybe. But if you want the asset protection, just get it. If you have the funds, invest in it and make sure you lock down your assets.
So when we talk about asset protection, a lot of the people that invest in Thrive Nation are new to investing.
Mhm.
What are we getting protected from, or what are they getting protected from? Someone falling on their property and suing them? Like
Yes. Yes.
what are
I
what
would
have you seen?
say the slip and fall scams, number one, predatory lawsuits, and like I said, for me, I always held a $2 million liability policy during the existence of my company, specifically for that, because I wanted the protection in case someone was going to try to sue me. And I was sued once, and I think it was like 2011.
Mhm.
And even though they had no grounds whatsoever, I still had to pay $8,000 to my attorney, and I had to fight it for 2 years. That was a pain in the patootie. I don't have to worry about that anymore. In fact, I let go of my liability policy because I don't need it anymore.
Ridiculous. Yeah,
Yeah.
and honestly, I've heard that the more you get in real estate, it's not if you'll get sued, it's when.
Yes.
As you keep going, because people are going to see, you have assets, and I guess they come for you. I don't
You
know.
become a target. You absolutely become a target. And if you have wholesalers on your team, people don't realize that even though you don't have a physical asset because you're just basically trading paper, right? You're just
Mhm.
assigning a contract. You got a seller that could be mad at you if they say, you know what, I didn't really understand that, even though you have documents, they can still sue.
Yeah,
The
anyone
buyer,
can sue about anything. Like,
yeah, exactly. So even wholesalers need to protect their company from those types of situations when you've got, three entities involved in a transaction where, you're in the middle of it and you can do this strategy, get your asset protection. You're doing it through your trust, and now you can feel much better because they're not going to come after you for that because they can't.
yeah, no, that's it for sure. Um, let's see what else. What is there anything else you wanted to cover, or do you still have, or can I ask some more questions?
Please go ahead.
So, if someone is a wholesaler and doesn't get assets, right, that they need protection, they just have their LLC and they just,
Mhm.
I guess, trade paper or whatever,
Right.
assign the paperwork. Where, I guess, like, does this protect? So it doesn't just protect homes that you own or
No, it's
things.
your
It protects
business.
your
It's your
LLC,
business and you personally.
your
And
business,
if
and
you if you if you have a trust and you put your offer into the seller for your price through your trust, and then you sell you sign your contract to your in buyer, and you're going to make $15,000. Well, remember that you can go into it feeling really confident, knowing that if it blows up and it goes bad, you're good.
so it's the
They can't
ultimate
come after you.
protection for your business. LLCs are,
Yes.
I mean, that's what most people start with, but this is like the ironclad, like,
Yes, yes, and remember, they can get in this trust is based on contract law that is guaranteed in the Constitution, and it has a spendthrift provision that means that the legislature, Congress, state, local, city
mhm,
council, whatever, they cannot get involved in a contract between two entities. It's already been ratified by the Supreme Court and other court decisions. So, whereas the LLC, S corp, land trust, those are all creatures of the legislature, and what the legislature creates, the legislature can amend or take away, right?
wow.
So, you don't have any protection with an LLC. People think they do. You
Mhm.
don't. We have an attorney that works with our company now. He's also a client, and he became a client first, and they came on as on a consultant basis. And I've talked to him a couple of times, and he said, my I made so much money cracking supposedly impenetrable mazes of trust and LLCs and holding companies. Says there's nothing uncrackable, so I can't crack this one. And so that's what
So
I learned it.
yeah, because I've heard that holding companies, like holding your LLCs, and is that what it's called, holding company?
Mhm.
Yeah, holding multiple LLCs like that protects your privacy and you. But you're telling me not as much.
Somebody who really wants to go after you can get you.
Interesting.
Yes, and I heard that from an attorney who specializes in going after those kind of things to sue.
Wow.
Yeah.
That that's wild. Because There's a lot of companies that promote that, obviously,
Yes.
promote.
Yes.
So is this a strategy that a lot of CPAs, a lot of people know about?
No, they don't. And you got to remember, well, I didn't talk about this, but another benefit about this strategy is that you no longer have to take title to all your properties in a separate LLC or a land trust or whatever. And I was talking to I forget who it was, but it was an investor. I think he had something like 1,100, 1,200 doors, and he said, "My gosh," he says, "I'm spending $35,000 a year just on filing fees and accounting stuff, because everything's set up." And accountants love those systems. Attorneys love those systems because that's how they get paid, right?
Yes.
So this system means that you can take title to as many properties as you want, one entity, one tax return. That's it.
And that
So you don't need
entity
that.
is the trust, correct?
Yes, the beneficial trust, yes.
Beneficial trust. Okay.
Yeah, so basically, in my experience, most CPAs don't know about it, or if they do, they're not gonna promote it because it reduces their income,
Yeah.
right?
Instead of being able to put you on multiple LLCs and
Mhm,
gets you in one. So 15. So if let's say someone on here, Investor Dive is like, man, I got to get that. I got to protect myself and I need the
mhm.
tax savings. What's the next step for someone like that?
Contact me, we'll get on a Zoom, we'll go over the procedure, it's very simple. We just gotta fill out an application, it's very simple about what you want the name to be, who you want the trustee to be, who you want the beneficiary to be, and who you want to be what they call the grantor, because this is a non-grantor trust, which means if I'm gonna be if I'm gonna be trustee of a trust, I cannot set the trust up because that's called a grantor trust, which gives you no asset protection at all. So
Mhm.
someone has to set the trust up, name me as the trustee, and then that person resigns, and then I'm the trustee of the trust that's its own entity, where I'm just the
Okay, so
trustee.
they have to name someone that's going to do that. Okay.
Yes, yes, that's
Who,
all. That's we
who's that
go over all
usually?
that.
Is that it's a wife or a friend or
Yeah,
what?
yeah, yeah. Someone you trusted, and literally all they do is just set it up, and then they resign, and that's it. And
Wow.
then you become trustee of the trust. That's it. And
And do you?
then, sorry, go ahead.
I was just gonna say, and do you pay? Like, how does the payment work?
As far as buying the trust.
Yeah, getting everything set up. Is it like
Wire
a
the
one
money
time?
wire the company wire the money I mean, you fill out the application, everything is approved, which takes about a few days, it doesn't take very long at all, and then wire the money in, and within a week, you've got that trust book that's delivered to you, and that's how you run everything through that book.
So how would it work if someone has, let's say, 7 companies? Would they be able to put all those
Yes.
quickly in this
You
trust, or
you
does it
don't
take
put the
time?
com you don't put the companies in the trust, you put the assets
The
into the
assets. Okay.
you sell the assets to the trust, and then that's how it works. So and it has to be it's an irrevocable trust, which means that once you do that transaction of selling an asset into the trust, you can't pull that asset back
Hmm.
unless the trust sells it back. So it's
Okay.
why it's irrevocable, which is another reason why you get the tax advantages because it's not a revocable trust.
So, and this is a weird question, but like I'm in a lot of partnerships. I have a
Huh?
business partner. So how does that work if you sell that to the trust and then I pass away? Like, are we?
You need to have a trustee successor, a successor trustee.
Okay.
You always that's one of the things you need to do is to make sure that if something happens to you, that the trustees you have a trustee chosen to take over. Because remember, these trusts are going to last forever, and every 21 years you renew it because I mean, the Rockefellers formed their trust in 1914. It's still going,
Wow. So
right?
you just keep handing it down for generations.
Hand it down the whole time, exactly. And that's why a couple of things about this. If you put your property or your assets into, let's just say property, if you put your property into a beneficial trust, and the government tries to do eminent domain on you, you can give them the finger. They cannot force you to sell.
Yeah.
And also estate tax. Everything's in your trust, then you know you never have to there's no inheritance tax
So
ever.
do a lot of people not use trusts when buying a fix and flip property because they're only going to be holding on to it for maybe a couple months or until the flip is done? Like,
Probably. I was using land trust, yeah.
okay. So how would that look like if let's say we got 90 flips that we do next year, for example, and we do them all through this trust? How does that work? Nothing different?
Nothing different. It just goes through the same bank account, and you take title with the trust, and it's easy.
Why don't more people do this?
They don't know about it.
Okay,
I
so
haven't been able to get in front of them yet.
that's right. Well, you get in front of thousands and thousands of fans right now, so
Yeah. It's really that simple. The biggest thing, the biggest challenge that I found with most people is wrapping their head around the simplicity of the strategy.
well, it sounds very simple from what you're telling me. So
It is.
there, I mean, I get it. If I had to teach it back to you, I might need to listen to it a couple more times. But
Right.
um, yeah, I mean, it sounds like a smart move, if especially if you get asset protection and tax savings.
Yes, 100%. Now, I do a lot of partnerships in my short sale business.
Hmm.
That's why a business trust was better for me because, you can't, with a beneficial trust, you cannot have set distributions, right? So that's why you need to have a separate entity to operate the business through, which is either the LLC or the business trust. But the business trust is much better, to do this. It's better equipped to handle that than an LLC. And because you can have all the different operating agreements with the different people you're working with, unlimited DBAs, unlimited bank accounts, all that stuff you can do through a business trust that you can't do through an LLC.
So what if you start this trust and you have a falling out with your business partner or whoever's in there, just like not death, but you falling out and you want all your stuff out. Like, how does that work?
My suggestion would be to not have business partners in the beneficial trust.
Okay.
Uh, Each one should have his or her own trust, and then
Mm,
they have a business trust where they have their operating agreements that are set down in paper, and when the partnership ends for whatever reason, it's like a prenup, right?
yeah.
Everything's done through these operating agreements, so that way the assets are not in jeopardy.
Okay. So if you have, let's say, 10 properties,
Uh
they're
huh.
in your LLCs that you have partnerships with, they're in the
Yes.
business trust, and that's how everything's done that way. But
Mhm.
the properties, the assets are in the
Yes.
beneficiary trust, right?
Beneficial trust. Yes.
Beneficiary trust. Is that right? Okay.
Yes, and how you dispose those properties and everything, that's in your operating agreement that is done through the business trust.
Okay. But in the business trust, you can have partnerships. It's not like everybody
Yeah,
has to get their own
yeah,
business
yeah,
trust. Or,
yes. Right, because when I JV with people, we have our JV agreements and everything and they have set distribution, so I don't run that through my beneficial trust, it's all through the business trust.
so who this is just a question about, it must be difficult to educate some people come in. Do your CPAs, do your people you work with, like, try to teach them what's going on, or do they just do it and just say, hey,
No, I mean, that's part of that's why, listen, experience has shown that, it needs a year to be able to make sure that all their questions are answered. And
yeah,
so that's why they give a year's worth of unlimited consultation to our clients, specifically so they can, it's hard to wrap their head around it and to think about a different way. I mean, the biggest challenge, what that's not the biggest, but one of the challenges is stop thinking about write-offs and
mhm,
think about if it's a trust expense or not,
mhm.
right? And you have so much more leeway as a trust expense as opposed to whether I can write it off or not. And there's some absurdly amazing benefits you can get. For example, Nate, do you have children?
I don't have any kids yet, but my
Okay,
business partner does.
when you have them, okay,
Mhm.
until they're 21, their education is a trust expense. Okay. If you wanted to fly them to Egypt to see the pyramids, that's all education and culture. That is a trust expense.
Wow.
You, your spouse, the kids, a nanny, whatever, the whole crew, fly over there as a trust expense. Try doing that with your S corp. Writing that off. You
Yeah, I
know,
don't think that'd
uh,
work.
if you have all your assets in the trust, your personal residence, your vehicles, whatever, if they're in the trust, then anything that goes wrong, any expenses of those assets are a trust expense because as trustee, your job is to manage all your assets. So if your water heater breaks, the trust pays for it. You pay for gas.
It sounds like you put everything in that bad boy.
The only thing you can't do is what they call the three F's: food, fun, and fashion. Okay.
Okay.
So, and people say, well,
Those
then I
are
won't.
limited expenses, right? Like, food.
Yeah. So then what you would do if you're saying to yourself, well, okay, well, how do I pay for that then? Well, you remember that demand note we talked about at the very beginning?
Hmm.
So you pull cash from the demand note that the value of the assets you sold to the trust. And so, I mean, you could have $1 million, $2 million, whatever those assets were valued at, in a way that they were not a taxable event at the beginning. Then, when you say I want 20 grand that you just for fun, food, fun, and fashion, then you pull that from your demand note, and that's also not a taxable event.
Wow.
So that 20,000 is not taxable. See, it's all designed to never create a taxable event.
That's crazy. So I think this is awesome. And I think if someone has multiple LLCs or makes that over a certain amount of income, like it sounds like a no brainer from what you're saying. I
Yeah.
think the worry that I would have is if I did something like this is like training my CPA or getting the right CPA or whoever does my taxes. Cause you can educate me, but I'm not trying to educate my tax
Well,
guy.
we do have, CPA firms that we work with that that work with the trust and they're familiar with it, and you might want to make a decision to move it to someone who's more trust friendly and trust aware. You
Okay.
know,
Yeah. So
where it's not going to be a big hassle trying to get dinosaurs educated on how this all works.
and you're not trying to like educate other people how to do this. I mean, I'm
Right.
sure most people don't even want to think about this. They're probably like, "Hey, just set it up," right?
Right.
But
Set
is
it
that
up, and then you set you get it set up. We'll work through it, and like I said, you can definitely work with these trust friendly accounting firms that we can recommend that work with us closely and say, hey, you know what? They'll help you set it up and make sure everything's done correctly.
and you yourself, like you said, it's been about 20 years in real estate investing, but this past year you paid $0 in taxes. How'd that feel? Probably
It
felt
felt amazing.
that's awesome. Can you go back? Like, can you like
No,
go back? Like, okay, so it's only
can't do it.
going
Can't do
forward.
it. No,
Okay.
that's what I'm saying. For anybody who's thinking about doing this, better do it sooner rather than later because we're in the middle of 2022, right?
Yeah.
So what you've earned up to this point, you really can't do much about it, but you still have time to set this up, and you can work it to where you can what the rest of the year will basically be tax free because you will already, we would have already paid or about you've had your income there, and you can expense everything out. I mean, I'm not an accountant. I don't claim to be an accountant, but
Mhm.
you can work it now. If you still do it now, like in the next month or two, you're going to still be able to save, tax or defer permanently most of your taxes that way. But you start getting towards the end of the year, then you're not going to be able. You're not. There's not enough time. So if you want to do it quickly. I would say
Yeah. So, and you're saying that just so I understand and people can hear about this, it's what is the total investment usually for the
fifteen
benefits?
thousand for a beneficial trust. There's an additional 20 if you want to set it up with a business trust as well.
So you're looking at about 35 if you do both, and those can
Yes,
be activated probably pretty quickly. It doesn't sound like
a week,
there's like a qualification process,
a
like not a
week.
qualification,
No,
but it's not
yeah,
like
you don't. No
they
one's
don't
going to
deny
approve it.
people.
No, you have to have an EIN number and social EIN number. That's all you need. If you're not a U.S. citizen, you can do it with an ITIN number, and you can do
Dang.
that as well. Yeah.
Okay. Well, hey, I mean, that's a lot of good info, and I think that's a very valuable thing that you're doing, and I think that's sweet. I mean, I'd say let's wrap it up unless you got to say anything
No,
else.
I'm good. I guess the last thing I would say is just uh, you're going to get pushback from the establishment, CPAs, attorneys, and so forth. They don't. The ones that don't know about it, their knee jerk reaction is always going to be, "I don't know about that," you know.
Yeah, because they
But
don't understand it, right?
right, they don't understand it, or they do understand it and they know that they're going to lose a client that provides them revenue. So, but we, you know, reach out to me. I'll get you on a Zoom. We can get you with our trust specialist if you need to. If you have attorney, questions you want to speak to our attorney about, I can set that up as well. So we want to make sure that you can do your due diligence and make sure you're comfortable with the legality and the efficacy of this strategy and the benefits that you'll get if you take the plunge.
I love it. I love that. So, how can they reach out to you? How can people reach out to you if they're interested in this?
Want to put it in the chat or
Yeah, I mean, I can put it on the chat or a link to it when we put the.
okay, yeah, I'll give you my my Calendly link. That's probably the best way to do it.
Yeah.
And
So, can I show you something? I think we might be able to
please,
work something out.
Sure.
I want to share my screens because we just came out with investorthrive.com. Like it
Oh, okay,
already
awesome.
existed, but
Uh-huh.
we revamped the website. So I want to kind of show you exactly how I think I could help you out. Um, so at investorthrive.com, basically my goal, not only to help people succeed financially and in their personal lives, but is to create like a hub like the investor, like a hub where people can go for information for free to
Sure.
invest and get information. So if you go to my website, if you just click on the top right part under free resources,
Okay.
I think I could plug you right in.
Oh, that'd be awesome.
Let me see. Let me just show you what it looks like when it looks like seems to be loading. But yeah, so what I've done is I've taken specific resources I feel like wholesalers, real estate investors need, instead of them having to guess what list service, what LLC service, like what is the best out there. I kind of put it into a format where, you know, it's like, hey, what CRM do I need? Well, Nate recommends right now Already Simply, Freedom Soft. I've used them. I'm not going to put anything on there that doesn't have my stamp of approval, but
Mhm.
like I said, I wanted to create a place where instead, if you're new or experienced and you just want some ideas of where to go to
Mhm.
for the best any of these services, you can go. So I mean, let's chat after this and let's plug you
Yeah.
in. And I think, you know, that way people that are interested in tax savings or doing things of like asset protection, you know, they'd be able to reach you. So anyway, I'm just excited about the site. So I want to show you and everybody.
I think it's great. I'd love to be on there.
So yeah, and for anybody else on Investor Thrive, you can go here. We have a lot of cool tools. We have a free course that you can sign up for that teaches you how to get into real estate investing. It's absolutely free. And I'm just trying to give back because I remember when I first started, I didn't know where to go and I had no experience in real estate. So here you go, investorthrive.com. But hey, Don, that was awesome. I really appreciate your time. That was really cool to find out a little bit about how people can get into the tax savings and
Mhm.
asset protection and not stick it to Uncle Sam, you know?
Yeah, my website is to hell with the IRS, so right to the point.
Well, they're not going to forget. No one's forgetting that, right?
Right.
Okay. Well, hey, Don, it's great. We're just going to end this call right here, and
Great.
then you can stay on
Yeah, no problem.
and chat. So, hey, Investor Dive Nation, thanks for tuning in. I see a lot of people stayed on the whole time, so let's go. Talk to you guys later. Have a great rest of the day.
See you guys.